There are a lot of ways to go about saving money for retirement, the future, or just putting away something for a rainy day. You could go the traditional route and put dollars into an account and watch it grow over time. While this method has been tried and true, many are opting out for something a little more tangible. There is a way to make investments that will return a lot better returns than you may get by putting away a few dollars here and there. In order to find out just how this works, you'll have to think about putting money into precious metals instead of anything else. The question becomes a matter of looking into investing in silver or gold. Each one has its benefits, even though some prefer one over the other. The overwhelming truth about this is that you can place your investments into something that is concrete that will only appreciate in value through time. If you look at the way both precious metals have shifted in these modern times, you'll note that each one has moved far forward faster than any other money type. In the case of gold, this is especially true. You'll find that there have been recent spikes and slight dips in the overall value of this option, and it's getting investors really excited about the future. When looking into getting your retirement set up, or just putting money into an account, you'll have to battle the reality of inflation. This sometimes outweighs interest rates, and it can really put a damper on the notion of putting your money in the bank. For those that aren't familiar with how inflation works, it essentially devalues the notes that you have. For instance, if you were to save $10,000, and you were to keep them in a high-interest account that was lower than the rate of inflation, in 10 or 20 years your $10,000 might have increased in numbers, but the value of each individual note is less than before, meaning you will have less money than ever, even though you have higher numbers. The reason this is a bad thing is because the government continues to print money, and that means there is more circulation. The more money circulating, the less valuable it becomes, and that is problematic in the long term. That's not the case when you are investing in commodities that are somewhat scarce. There is a finite amount of precious metal in the world. Whether you invest in silver or gold, you will run into limits that is creating a higher value for each ounce that you can get your hands on. In time, there will be no more metals, making it a rare commodity that will be highly sought after, and more valuable than the paper currencies that everyone is used to. It's for that reason that you should look into investing your money into these tangible items, or else you'll be left out when economic times shift.